Alrighty, good morning, guys, and happy hump day. This is Taylor getting the party started for January the 18th. Do a quick sound check. Good morning, Lee. Good morning, Mirza. Good morning, Miss Lorna. Good morning, Jane. All right, the whole crew is here. So we'll jump in, guys. The futures are a little bit back and forth here. Believe we just got the retail sales, so the market is digesting all that good news here. But we'll jump in, guys. So let me get my drawing tools. So pretty good push here as of late. And now it's just kind of a question of, where do we go from here? And I think over the last year or so, we've grown pretty accustomed to seeing these rallies fail. All right, bear market rally, short squeeze, whatever you want to call it. The bulls will get something going for 2, 3, maybe 4 weeks, and then it all kind of craps the bed. So I suppose the question this time around, are things different? And without getting too concerned with, where does the market go next month? Where does the market go, March, April, May? In terms of the colors in front of us right now, the bulls have got a little bit more to work with than they've had in quite a long time. So I'm not saying that we're going back to a bull market. I'm not even saying the bottom is in. But based on a few changes here in the indicator, they've got a pretty good shot here. Called their best shot in probably over a year to actually take control of the wheel for a little bit. So progress number one here for the bulls is on the weekly chart. All right, so all these previous rallies that failed, you had a rally back in April, failed. You had the big rally back in June, July, August, failed. You had the September rally, and pretty much failed. Those are just bear market rallies. And all you're really doing is playing out that pattern of lower highs and lower lows. Last week, for the first time pretty much since the downtrend started, the indicator goes from bearish to neutral. All right, we lose the sell signal, we get the gray bar. That's a pretty big shift in the favor of the bulls. Keep in mind, it's not as if the weekly chart is bullish. It's not as if the daily chart is bullish, so we're not in a bullish trend. But the indicator going from bearish to neutral tells us for now, for the first time in a long time, the bears might be running out of gas. Things aren't wildly bullish, but throughout the course of this entire downtrend, the bears have had a loaded gun. Right? Every week that goes by, even after we rally, indicator continues to print the sell signal. So we're not bullish all of a sudden, but going from bearish to neutral just tells us the bears might be running out of gas. Right? They might not have that loaded gun that they've had for the last year, which has you seeing all these rallies ultimately fail, roll over, and make a brand new low. So that's a lot of progress. Now the question becomes, can they keep the progress into Friday's close, or say sometime next week? You're back under your weekly 21. They're giving back a little bit too much progress. But to me right now, that's one of the bigger observations. For the first time since that downtrend started, indicator goes bearish to neutral. So from that perspective, it does make sense that all these previous rallies have failed. If you have a sell signal, the indicator is telling you trend, structure, momentum, everything's working in the favor of the bears. Basically calls the market's bluff on that rally. So pretty big shift for the bullskis there. We are in a weekly squeeze. The histogram is positive, and we're trading well above that weekly 21. So some progress on that end. Our daily chart goes from bearish to neutral. Takes out the 21, takes out the 50, and we're back above the 200. And your lower time frames go bullish. We've got some nice hourly buy signals. So some pretty good progress there across the board. Now we're kind of creeping up on a major level of resistance. So pretty much for the whole duration of this downtrend, the weekly 50 SMA has pretty much been where the party stops. So they trap the shorts, squeeze the shorts, you get a good old pump. That pump takes you pretty much towards your weekly 50, and then we fall apart. Trap the shorts, squeeze the shorts, they take it back to a weekly 50. Everything fails. So be very mindful of that level of resistance. Where I'm thinking the bulls might actually have a decent chance here of taking the market through that level of resistance is because we no longer have that weekly sell signal. So that's our major level to the upside. Key level of support here, we'll make the math easy. 39, 30-ish, 39.25. Right? Just take the progress that's been made on a weekly chart, on a daily chart, and even on an hourly chart, and then ask yourself, where do they give back all that progress? We could even call it 3,900. If the bulls are really taking control of the wheel here, we should not see the S&Ps back under 3,900. Then your weekly chart is back under the 21 EMA. Your daily chart back under the 21 EMA. And the hourly chart would totally be breaking structure back under the 200. Right? At that point, they've given back a little bit too much progress. So my thinking for now is as long as we're above that level, as long as we're hanging out above 3,900, looking to buy the dips, looking for a test of 40.50. And if we don't get a dip before we test 40.50, then I might have to adjust that game plan. But for now, I am leaning a little bit bullish here in the short term. One more chart here, guys. And again, tie it all together. What's different this time around? Weekly chart on the SPX, bearish to neutral. All right, so that didn't happen on all these previous rallies. And the biggest change here as far as the overall market, total breakdown here in the dollar. And so coming out of 2020, there's your weekly chart on the Dixie. So even if the market tries to rally for a bit, the market's rallying in the context of a really bullish trend here in the dollar. Right? And that correlation is not positive for the market. Weekly buy signals on the Dixie and weekly sell signals on the S&Ps, the recipe for a downtrend. Right? So now we're getting a shift on the weekly chart for the market, and it's all coming together here. The big breakdown in the dollar. Weekly sell signal, daily sell signal. Basically, every lower time frame's got a sell signal. That's what's different this time around. Now, if we wake up tomorrow and this all changes, the dollar is breaking out, the S&Ps are taking out that 3,900, you got to adjust your game plan, right? But without really trying to have a conversation about, where does the market go from here? In the present moment, these are big observations. Every attempt that the market tried to make to rally in 2022 was done under the context of a really bullish trend on your Dixie and a bearish downtrend on the S&Ps. Those are notable shifts. We've got pretty much every time frame across the board telling us path of least resistance for the dollar is now to the downside. Right? That's a totally different context than last year's market, where the dollar couldn't have been any stronger. Takes out the weekly 50. First round of weekly sell signals since May of 2020. You probably got a path here for a push down towards your weekly 200, right around $98. So that's a big piece of the puzzle. The window of opportunity here for the bulls to really do something with the market is really linked to the Dixie. If the Dixie continues to flush down towards that weekly 200, there's the bulls' window of opportunity. So things to be mindful of for now, guys. Futures are popping here a little bit. But my goal this year is to not be bullish or bearish. It's more so just be available to take advantage of whatever's in front of us. So what's in front of us right now are some pretty big shifts in momentum on the weekly chart. All right, and we're not bullish, but it's a shift in the favor of the bulls. The daily chart tries to rebuild. Lower time frames go bullish. Right, progress was made. Expect your dips, but if they can keep that progress, at a minimum, I think we're looking for a push back towards that weekly 50. If they can take it through the weekly 50 and we start taking out the previous swing high, well, the plot only thickens at that point. But until things change, guys, I am leaning a little bit towards long positions. So a couple of names I want to cover here. Starting off with NVIDIA. who's kind of going beast mode here. So the only difficulty might be fighting for a good entry. Yeah, this thing's pretty strong. So we actually took profits on this in the mastery yesterday. But I think you got room here for a pushback towards 190-ish. Right, that's your previous swing high. The only level to break, I think, to open up that door for a push towards 190-ish is the weekly 50. Rallies towards the weekly 50. Maybe it breaks through and just keeps pushing, but there is a chance here for a little bit that could be resistance. So the same theme applies. Progress has been made. Say we dip here at resistance. Did they keep that progress? At no point should we see NVIDIA back under 160-ish. Back under the weekly 21. That gives back the progress. Back under your daily moving averages. Back under your hourly moving averages. Under 160, NVIDIA gives back all that progress. So to fight for a better entry, I think we're waiting for a dip. It could be a dip to an hourly 21, could be whatever tickles your fancy, but fight for a good entry. And as long as they keep the progress that's been made, try to target these bigger levels. So I do think NVIDIA here's got a path towards 185, 190. We got to wait for a better entry. Next up is Google. So for those of you in the mastery, those of you who have taken a few of my classes, Google's pretty much the reversals trade. Right? And remember the recipe for the reversals trade, find something a little bit oversold on the weekly chart. So typically if you're 1 or 2 average true range moves away from your weekly 21, that fits the bill as far as a bit oversold. So under the weekly 21, daily chart goes from bearish to neutral. Lower time frames go bullish. Get some nice buy signals there on the hourly chart. Once that starts coming together, now you're looking for a path here back towards that weekly 21. Right, so that'd be the upside target here on a Google trade. Weekly 21 around 97 to 98 bucks. But where does Google give back the progress? Right, there's no progress being made in a weekly chart, which kind of works in our favor here in terms of an oversold bounce. The progress made in the daily chart is that we've gone from bearish to neutral, and we're cranking out a few closes here above that 21 EMA. And so we probably don't want to see it back under the daily 21. Where's the progress here on the hourly chart? We have a buy signal. We're back above all the key moving averages. You probably shouldn't see your hourly chart back under the 50 SMA. So call it 89 bucks, call it 90 bucks. I think getting long Google here offers a pretty good risk versus reward. Depending where we open up here today, build your bullish position inside this hourly squeeze. Put your exit under an hourly 50, under the daily 21. So it's a little bit of risk. But if things hold here, I think you got a path back towards that 96, 97. So you'll risk about $2 on the equity to potentially make a nice $5 or $6 to the upside. So we're keeping an eye on the big goog here. Next up, guys, is Amazon. And I think, if anything, Amazon's going to come up here and smooch, the big pretty number at $100. So the key, of course, is fighting for a good entry. And you're right under your weekly 21. So not too crazy to think we come up here, smooch the weekly 21, smooch $100. And depending on if we can get a good entry or not, that should be enough for a solid trade here. So our hourly chart is bullish. Daily chart back above the 21, back above the 50. Depending on what you want to anchor to, you probably should. Yeah, you should definitely. Yeah, we'll call it 90 bucks. You should not see Amazon back under 90 bucks. Should not take out the hourly moving averages. Shouldn't take out the daily moving averages. So with an upside target of $100, you're just fighting for a good entry. Right? The best entry possible would be right on top of that $90 level. So the closer we can get long to that 90-ish level, the better the risk versus reward between an exit under 90 and a target of $100. So that's kind of the theme. NVIDIA, Google, Amazon, got to fight for a good entry. And you really want to fight for a good entry when the market is kind of hanging out under major resistance, especially like on the futures here. Yeah, the futures are like right at the weekly 50. So fight for a good entry. But the last name here this morning, guys, let's see, Google, NVIDIA. Oh, yeah, the Big Apple. How could I forget? Old Faithful. All right, so for Apple here, thinking you might have a little bit of a bear trap. All right, so they came down. They broke pretty much like the only level of support left at 130. So you're roping in a lot of shorts here, and then they ripped it right back above 130. So above 130, I think you got that bear trap dynamic. I think your upside target, keep it modest. Look for a pop back towards your daily 50. All right, 140-ish, 142 gets you back to a weekly 21. So I think you can play for a pop here towards 140. You should not see this back towards 130-ish. And again, fight for a good entry. All right, but it's all starting to heat up here. Hourly chart just went bullish. 30-minute chart just went bullish. 15 is bullish. So from the ground up, Apple's shaping up pretty good. Pick your exit level. For me, it's probably going to be 132-ish. All right, anchor to something meaningful. To me, a daily 21 EMA, an hourly 50, that's a pretty meaningful level. So pick your exit. I think you're looking for a push there towards 140-ish. And keep in mind, guys, it's all kind of contingent on the market not falling apart here. So a dip is normal. I think a dip actually would be favorable here, but we should not get back all that progress. S&P start giving back progress. Being long NVIDIA, Google, AMD, Amazon probably doesn't make too much sense. So wait for a dip, fight for a good entry, but in a notebook or something, write down the progress they're making. And perhaps you see things differently than I do right now. But even still, if you see things differently, write those things down in a notebook. And then day by day, you're looking to see, do these things change? Right, so I've got all the progress I think the bulls are making written down. Every day moving forward, I'm just trying to make sure they keep that progress. So if you guys got any questions here in the free room, any questions on YouTube, toss them at me. We got a few minutes. Yeah, Wednesdays were supposed to be my day off this year. And somehow it's turned out to be like the busiest day of the week. So for you few folks in the free room, I'll be back later this afternoon. And then for those of you in the options room, I got the honor of doing the close today. The pressure is on. If I'm doing the close, I'd imagine I'm filling in for JC. What's up, Jim? Good morning. Yeah, Jim, Netflix. I think Netflix goes on the buy the dip watch list. Now, if I'm not mistaken, and I am mistaken every now and then, I think we have earnings either today or tomorrow. Yeah, so Jim, earnings tomorrow. Which for me, obviously not enough time to do anything with this. But all in all, Netflix does look pretty solid. You got a weekly chart trying to turn the corner. 21 crosses back through the 50. Canceled out the sell signals quite a while ago. So that's a weekly chart in progress. You've got fresh daily buy signals. I think you have a glaring target around $400. Weekly 200, big old, sexy psychological number. I think there's a lot to like here to the upside. My question would be, does earnings, there's kind of like one of three things earnings could do tomorrow. It could see Netflix gapping higher, which at that point for me, I've kind of missed the train. It could also see Netflix dipping a bit, right? Perhaps offering a much better entry, or see Netflix just totally falling apart. So I would like to buy it. I'd like to buy it closer towards that daily 21. So it's just a matter of how does earnings, how does that cookie crumble? But I do think for now, a lot to like here. A lot to like. Hey, 007, what's up, brother? Good to see you. Yeah, Avery, we'll take a peek at the HYG here. This is also shaping up pretty good as well. Weekly chart went bearish to neutral. And understand the distinction. We're not in a weekly uptrend, and we all know that just by looking at it. But it's a divergence. If they've got that sell signal, the bulls or the bears rather, they've kind of got like all the ammunition in the world. They got all the ammo they need to just slam every one of these rallies. Well, the HYG bears no longer have all that ammo. Doesn't mean the bulls are taking it back to $80, but bears are running out of gas. Daily chart goes from bearish to neutral, and you're trading back above your daily 200 for the first time since, let me check my note here, trading back above the daily 200 for the first time since October of 2021. So it done been a while. So yeah, HYG, not mind-blowingly bullish, but day by day here trying to shape up and make some pretty good progress. So I do think that kind of fits in pretty well. Same rules would apply. What progress has been made, and a potential red flag here would be if HYG gives back that progress. You see this back under $75. That's a little bit sketchy at that point. But good question, Avery. Definitely want to keep an eye on that. Tony, what's up, my man? Alex has got some MDT. What's up, Alex? Looks like a good example of that reversal trade. Weekly 21 around $83. Daily chart goes bearish to neutral. Rebuilding the daily. And you got a great looking hourly squeeze. So it's a little bit along the lines, Alex, of the Google idea. We're trading under a weekly 21. Signs of exhaustion from the bears on the daily chart. Signs of the bulls taking over on the lower time frames. It's not gonna magically send MDT back into a crazy uptrend, but for the time being, it gives it a pretty good chance here, I think, to come up there and give that weekly 21 a little peck on the cheek. So it looks like a good reversals trade candidate. Hey, good morning, PM. Yeah, we can take a look at Tesla. I've heard of it before. This has been a pretty nutty one. Let's just go time frame to time frame. All right, and I think the context on Tesla is one, they've beaten the snots out of this thing, almost to the point of no repair. Meaning it's going to take a lot. It's going to take a lot for Tesla to fix all these bigger picture problems now. Weekly chart gets hammered. I think even a monthly chart. Yeah, you have a brand new monthly sell signal. So these bigger picture problems, I mean, put it this way, the stock will have to double from here to start to clean up the structure of the monthly chart. Not saying it doesn't do that eventually, but there's our context. It's got some bigger picture problems. Now, at the same token, you look at a weekly chart, we're 100 miles away from the weekly 21. Trades at 130, the weekly 21's up there at 185. So it's got some bigger picture problems that probably don't get fixed for quite a while, but it's also got some crazy oversold juice here. So to me, the bullish opportunities in Tesla for now would be trying to pursue those, call it a short squeeze. Right, we're not in an uptrend, so the window of opportunity to be bullish is on those bigger picture reversions to the mean. Rallies back to a falling daily 50. Rallies back to a falling weekly 21. Right, so there's your context, and then it becomes all about the lower time frames. Right, we're not going to see anything bullish, at least from my indicator, in a really long time on the larger time frames. So to get bullish and work that bullish playbook, we got to find those pretty colors somewhere. Right? So our daily chart, and this is progress, cancels out the sell signal, cranks out a close back above the daily 21 EMA. Actually, no, we closed around, where did we close yesterday? Yeah, we closed above the 21, and the indicator goes bearish to neutral. So a divergence in the favor of the bulls. The hourly chart isn't bullish yet, but it's rebuilding. A big level of resistance around 138. Now we're getting signs of life. 30-minute chart goes bullish. 15-minute chart goes bullish. So take that bigger picture context, but then take your progress across your lower time frames. Tesla can be 30 average true range moves away from a weekly 21. If the lower time frames can't rebuild, you're not going to get that bear market rally. Right? Just because something is oversold doesn't mean you're going to get some playable reversal. Based on the rule of thumb, Tesla was oversold $70 ago. But where you can actually catch those nice short-lived reversals, right? It's the reversals trade. Oversold on a weekly chart. Daily chart goes bearish to neutral. Lower time frames go bullish. And with a gap up here this morning to 137, that progress is just going to continue to build. We'll be further above the daily 21. The hourly chart might actually go bullish. So that's the key line in the sand here, right? You want to see it trading above the weekly 21, and you're fighting for a good entry. Where I would say be cautious this morning, we are going to gap up right under the hourly 200. And I got to imagine this is probably the first test of the hourly 200 in about a month. So you saw what happened last time. Trapped the shorts, big, really big oversold rally, 170 to 200. That's a big ass push. But the 200 spanks it lower. So be very mindful of that 137-ish level today. What I would like to see, right, first test of your hourly 200, usually you're not going to break out. So what I would like to see, open up under the 200, right, get a little bit of a dip, and then as long as things hold, right, you got a 30-minute buy signal, you've got a 15-minute buy signal, might be worth a shot trying to jump in. So we'll keep a close eye on that one. Tom has got some UAL. Big old push here. All right, so observation numero uno. You are coming up on pretty big weekly resistance. All right, your previous highs back here, and the weekly 200 around 53. All right, so always be careful initiating the long position this far above a daily 21 and this close to the major resistance. Right, same kind of like discussion we just had on Tesla with the hourly 200. The first attempt usually doesn't break out. You're better off waiting for a dip, making sure everything still holds structure, then you get long for attempt number 2. So be mindful of that level. And also be mindful of earnings. Chugga. Looks like they might have announced this morning. Yeah, they're up about $2. Fight for a decent entry, which for me is just always going to be a lot closer to the daily 21. But pretty strong there. Pretty strong. Chaz, will Tesla stay under 140? We'll find out. Here's what I think. And it's just kind of like a probabilities thing. Usually the first test, and you guys have heard Sam talk about this a lot, right? So this is a good part of his analysis in the options room. First test of the falling, right? We're in a downtrend. First test of the falling 200 usually fails. I don't mean fail in terms of, hey, we're going back to $100 here. I mean fail in terms of you're not going to quite get the breakout just yet. There might be a dip, right? There might be consolidation. It's usually attempt number 2. So, Chaz, what I would say here is whether it's on attempt number 1, attempt number 2, attempt number 3, if the bulls can get and keep Tesla back above that hourly 200, you probably see them start to trade a little bit higher. Think short squeeze. A lot of people jumping on the short bandwagon. Back above the hourly 200, they probably start sweating a little bit. So I think a pretty important level to watch there. All right, guys, last one here. Marcy's got some Moderna. Coming together here. Neutral weekly chart. Neutral on the daily chart. Bullish on the 1 hour. Bullish on the 30. Yeah, so your larger time frames aren't overly bullish or bearish. But the question right now would be, which way does that daily squeeze fire? If the daily squeeze has a buy signal like it did back here, it's a little bit easier to gauge, which direction it's probably going to launch. But right now we're neutral. So we don't have the same context, but that is the question. Does the current daily squeeze roll over and fire short? Or do we fire long and head back towards the highs? So the answer to that question for now is probably going to be in these lower time frames. If your hourly chart keeps behaving like this, prints a buy signal, trades higher, pulls back to the 21, trades higher, pulls back to the 21. If your hourly if your hourly chart behaves like an uptrend, that all kind of leans in the favor of that squeeze firing to the upside. So that's where I think you get your clarity on Moderna for now. Anchored to an hourly chart, anchored to a 30-minute chart. Look for them to continue to behave like a trend. Nice push. Pull back to the 21, find support. Puts in a higher high, pulls back. If you can get that kind of behavior from your lower time frames, that would all be like an earlier indication. The daily squeeze probably gearing up to fire to the upside. Just the opposite. Hourly chart takes out the 21, takes out the 200, right? You lose your buy signal, and you're probably going to chop or just trade lower. And then, VR for Apple. I think Apple is a long above 130. I think above 130-ish. They're trying to rebuild here a little bit. I think you could look for a rip back towards your daily 50 around 140. So it is starting to wake up a bit. Hourly chart goes bullish. So we've got some buy signals on that end. We'll check our 30-minute here. '30-minute chart is bullish. So slowly but surely, Apple's shaping up pretty good here. So I think above that daily 21 EMA, it might be gearing up for a push to tag the daily 50. But all right, guys, I will let you loose here. We got the cash market opening up in about 10 minutes. So like I mentioned earlier, let me check the calendar here. I will be back, and I will be back back in the free room at hang tight. 1 p.m. Eastern, 12 p.m. Central. So I look forward to seeing all of you then, and then I will have the close in the options room. So as always, guys and gals, thank you for your time. Always appreciated. Hope you found the analysis helpful, and I will talk to you soon. Adios.